There we go. Oh, the virus is spreading. What's up, Lenny? All right, guys. So yeah, this is not financial advice. I can't wait to talk to this gentleman right here. Really honored to have you on, man. I've been following you for a while, and I really like and admire what you've done. All the positivity as well as outstanding information and kind of coming at it from a different angle from my personal perspective. I really value what you think. So thank you so much for joining, Pomp.
Absolutely. No, look, I'm happy to be here, and thanks for having me.
Yeah. So obviously, the mantra for you is the virus is spreading, as well as tokenizing everything.
Tokenize the world.
Tokenize the world. So we've definitely all heard you speak on tokenized securities on the blockchain, but and we'll definitely talk about that as well. I would like to have. I can't wait to have this conversation. So let's not even waste any time. First off, why don't you tell the people watching? There are some people that may not know you. I don't know how, but tell us a little bit about your journey, how you got into crypto, what you do, and the whole scoop.
Yeah. So did a bunch of stuff, built some companies, ran a number of product growth product and growth teams at some of the large tech companies, Silicon Valley, and then started a early stage venture fund about two and a half years ago. From there, started just making early stage investments, just your run of the mill early stage fund, but started to see a couple of things. So one was founders who were thinking about starting companies started to go into blockchain. Then some of our companies were losing their top talent to the blockchain space, and then some of the co-investors we had started to put money into the space. And so at first it was Bitcoin, and then we started to see kind of the proliferation of that into other projects. And my partner and I went in, and I think at first it was let's just learn, right? But very quickly we said the one thing that we couldn't get over was I give you money as a founder of a project, and I don't get equity, I don't get debt, and I don't get cash flow. And so we were just trying to wrap our heads around, coming from a more traditional investing background, like, what do I get for my money, right? And not being able to answer that, I think, kind of scared us a little bit. And so we basically came out and we said, look, we're not going to invest in these ICOs. We're not getting anything that we can understand, but we still think that this industry is interesting. There's a lot of value to be built here. And so we're going to go find other ways to invest in the industry, but we're just not going to invest in the ICOs, right? At the time, incredibly unpopular opinion to not invest in the ICOs, especially to say it. This is before people were really kind of vocal about that.
Right.
But what we started doing is we started building mining facilities. And so we ended up building, at first, what was the world's first waste-to-energy mining facility. Right. So we take car tires, put it through a thermal demanufacturing process, which basically means we break the tire down into the commodities. So we get oil, steel, carbon, and syngas. We sell the oil and the steel. And then we take the carbon and syngas, turn it into power, and use that power to mine cryptocurrency. And so, got into that game, really liked the mining business, mainly because there was less exposure to the price volatility. So even when on days where Bitcoin goes down 10, 15%, we were still making money because you're mining more and more coins, right? And so I always joke and say Bitcoin is a game of accumulation, right? And so there's, all kinds of trading and all these things. But I think Bitcoin is really just that game of accumulation. And so mining is a great way to participate without being exposed to kind of the day-to-day swings and having to day trade, et cetera. It's not something I'm good at. And so what we realized was, hey, we like this business. It's kind of infrastructure where we don't have as much exposure to the price risk. And so we started to look for more areas where we could find similar investments. And so we started looking at a lot of venture, so buying equity in companies that were in this space. And then, eventually we came up on the tokenized securities and, fairly early on said, look, we think that this is going to be the biggest part of the space. We think that all of these, kind of real assets, right? These are companies, real estate, et cetera, are going to move onto the blockchain. It's a more efficient system. It's more compliant. It's more global, et cetera. And, we want to go play there. Right. And part of that was our personal perspectives of my partner and I, just our investing background and our experiences. And then the other was a lot of the investors who trust us with their money. Right. And so a lot of these are, more institutional type investors who are really looking for risk adjusted ways to participate in a market that they foresee as one of the riskiest asset classes out there. Right. And so we can get into kind of why they do that and how they do that. But I think that's really kind of how we got down this rabbit hole. Was we started out in mining and then just started looking for more businesses that were infrastructure related or allowed us upside without having the exposure to that price volatility.
So let me ask you, that's really interesting stuff, by the way. But what was the price of Bitcoin when you started mining?
Yeah, so we actually didn't start mining Bitcoin first. We actually started with Ether. Yeah, so we started with Ether, right. And really it was we knew that we'd go to Bitmain, buy all the hardware, but it was just easier to get the GPUs, right? And so somebody that we knew, a guy JP Barrick, had a company that was starting called Mining Store, and he helped us kind of get the GPUs. We built, I think literally it was like 8 rigs. It was horrendously pathetic in terms of that first setup, and we laugh about it now. And so we went from 8 to tens of, then to hundreds of rigs, and I think that part of that was just learning, right? And so when we started with Ether, I literally think the first rig we turned on, Ether was probably like $10, right? $12, something like that. And this is. This is the great run up, right? So this is like,
early 2017, right?
Yeah, early 2017, and it went from like 10 to 90 by like June, right? I think like in like June timeframe or so, or kind of early summer, it was at $90, and from our standpoint, we were just like, "What? Like, is this normal?" Right?
What I remember is actually 300 in June.
Yeah.
I think it went to 90 in like March or something.
I remember it was like quick. 10, then 30, then 90, and like 10 to 90 happened really fast, and then it ran up to 300, went back down to like 150, 200, and it kind of stayed in that zone for a while, and then Q3, Q4 it just took off, and ultimately I think it was like 12, 1400, whatever it went to last year. Look. That business is incredibly attractive from a mining perspective, but again, it is if you look at it as just buying Bitcoin, it goes up 15x in a year, or you can mine, right? You're gonna make more money if you just bought Bitcoin and held it for a year. So you got to have that patience, that long-term view of the market, and kind of really believe that you're going to continue in this business for more than just 12 months, right? Or does it make sense to mine? And you should just buy Bitcoin.
Right. So personally, I was looking at like getting into a mining operation with ASICs, and this was like January, February time, and I'm looking at it like this is kind of risky. Like there's a lot more risk on the table now. I mean, any advice you would give somebody that's looking to start a mining operation or considering it?
Yeah, so I think that there's a couple of things. So one is I would definitely spend time looking at mining versus like masternode networks, right? One of the things I think is really interesting, and this is purely from a investment standpoint. So this is not talking about like the actual security of the networks, the technology, etc. This is just, hey, I have, I want exposure to cryptocurrency, and what is a way that I can get it where I've got less exposure to the price volatility, and I've got some aspect of cash flow. Right. And so when you buy mining equipment, you're buying a depreciating asset. It's hardware. You're going to plug it in the wall. It costs a lot of money, right, to actually operate this stuff. And then you start to validate the transactions on the network, and you get paid for it. In the masternode side, what you do is you basically buy some tokens, you stake them, and depending on the network that you choose, those tokens can appreciate or depreciate in value. And then you're validating transactions, and you're getting cash flow, right, or for that validation that you're doing. And so I think that it's less costly to run the masternode. It can be like $5-10 a month, and also you're getting similar economics depending on the network you choose. But the big thing to me is in one situation you're buying a depreciating asset, and in another you're buying a potentially appreciating asset. And so again, doesn't mean that everyone should go set a bunch of masternodes, but I think that where mining was really popular over the last 5 years, the masternode networks is highly underrated right now. And so I usually tell people, if you're interested in mining, you should check out the masternodes. And then if you still like mining and want to go do that, like just set up one rig. Right, literally just take the time, learn how to do it, set it up, plug it in, watch you mine the first token, no matter what network you're on, and then kind of just keep learning from there, make it more efficient, set up a second one, and kind of just go like that, because that's how we learned.
Right. So in your opinion, would you prefer like getting into masternodes at this point or mining? Like
so from an exposure standpoint, we have both. I think that both are really important. But I think, again, it depends on what is your risk profile and what your return profile look like, right? And so mining is, I consider lower risk, lower return right now, right, compared to the masternode stuff. And really the reason is because on the masternode side, a lot of people are picking these networks that are risky, right? They're smaller networks. They have these really high ROIs, but you're also taking the risk that those networks could disappear pretty quickly. Right.
And what's the purpose of the token? I mean, it has a masternode. We get more tokens. We sell them. I mean, it's an opportunity, but it's definitely a high risk play, in my opinion.
Yeah, it goes to this whole idea. So there's a difference between investing and trading, right? And what I always tell people is like most of what's happening in true crypto today, this is the cryptocurrencies, the utility tokens, etc., is trading, right? They're speculating on, hey, the value of this asset that I'm buying is going to go up over some period of time in the future. Right. And so there's nothing wrong with that. Right. By the way, people go play blackjack. They go play the lottery. They invest in speculative assets all the time, including public stocks of companies, etc. But what they've got to understand is they're making a trade. They're not making a long-term investment. Right. And so I think that understanding the nuances of those two things is important because neither one's right or wrong. It's just you want to make sure you understand what you're actually doing. Right. The worst case to be in is you think you're making an investment, but you're actually making a trade, because then it's really hard to understand what's my price target, what's my exit strategy, all of that kind of stuff in that trade, if you actually think that you're making an investment.
Right. So the way I see it, as far as that play, and this is kind of like, well. Let me ask you a question before we even get into that, because I have my own thoughts, but sorry about that. Tell us a little bit about what founding Full Tilt Capital was like, and how did that start? And also, even circling back, being that you decided not to participate in ICOs, you must have missed out on some good opportunities, right? Do you ever have any?
Absolutely.
Is there anything that drives you crazy? Like you could have bought this ICO and didn't? Like, is there one that gets you?
Obviously, I think everyone's pretty aware that Twitter blows up, right? We've got this public persona between myself and my partner, right? And there was no shortage of pitches that were inbound, right? In terms of, hey, we're doing this ICO, you should do this, whatever. And I'm literally watching our peers 10, 15, 20x, right? and it's the classic, like, they're getting in at the pre-sale private, there's so many names at this point. Whatever the first round they could possibly get in at, right, at like a 95% discount, that's what they were doing. And then they would turn around and they're 15x in 3 months, right? And it's incredible. But I think from our standpoint, we have a very different approach, mainly because, again, who our investors are, what our experiences are, and kind of how we look at investing. And so we said, look, that's not sustainable, right? In no market in the history of the world has 10, 15x returns over a long period of time been sustainable. And so if you're trying to drive those top 5% returns, right? It's the Howard Marks quote. Howard runs Oak Tree Capital. He's got this quote where he says, in order to be in the top 5% of all returns in a given year, you have to take such inordinate amount of risk that when you're wrong, you end up in the bottom 5%. So if you want to be in the top 5, you want to be in the bottom 5. And the difference is whether you're right or you're wrong. Right. And so for us, we tend to be more like Howard, where he believes, hey, I don't want to be in the top 5% because that means I took too much risk, right? Because I could have ended up in the bottom 5 if I was wrong. Instead, I just want to be above average consistently year in, year out over a 20 or 30 year period. And everyone else goes up and down in kind of their performance. But if you just consistently post those above average returns, at the end of that 20 or 30 year period, you end up being in the top 5% of all investors, because you basically avoided the drawdowns, you had that consistent performance, etc. So we joke and we say, like, that's super boring in a world where people are getting 15, 20, 30x returns, but all of a sudden it becomes really popular when there's an 80% drawdown in the first quarter of this year. Right? So you're literally seeing the cyclical nature of this. Will we ever see a 2017 again? I have no clue, right? I mean, that was a pretty incredible bull market that we just saw. Maybe we see it again, maybe we don't. I'm not sure. But I think that because we're not sure, we're not comfortable trying to invest into a market like that. Instead, we look for things where we're not comparing our returns to the crypto world, right? So when we miss an ICO and we're like, shoot, all our friends just made 15x, like we made 3, right? everyone's like, "Oh, you guys underperformed." Like, no. We're actually comparing. We're comparing our 3x to the traditional investment world, where they're, most of these institutions, their targets are 6.5% to 8% annualized returns, right? So 3x compared to 6.5%, we crushed expectations, right?
Absolutely.
Now, here's what I tell people is the difference of the risk return profile is that a lot of the ICO investors, for the most part, especially the retail investors, they are trying to become wealthy, right? And whatever wealth is by their definition, that's what they're aspiring to do. So they're looking for those outsized 10, 15, 30, 50x returns. The institutions, they're already wealthy. They already manage hundreds of millions, billions of dollars. And so to drive, if you have $100 million and you drive 8% annualized return, you just made $8 million, right? If you're starting with $10,000, $20,000 and you're trying to get to $8 million, you got to take a hell of a lot of risk to get there. And so it's this whole idea that retail investors and most of the people in crypto, outside of maybe some of the top, Silicon Valley type funds, they ask, how high can it go, right? Whereas the institutional investors ask, how low can it go? And so it's this completely different perspective. And I think that's where people say, oh, you missed out on the 15x. But we say, no, we beat 6.5%, 8%, right? So it's all about kind of the anchoring or the benchmark that you compare yourself to. But yeah, 3%, 3x, and you see somebody do 15, you're definitely kind of looking over your shoulder, like, hey, is this the right decision? But we stuck to it, and we're happy where we are.
Yeah, that's cool. Yeah, I could just imagine the offers that you got back then, looking at the performance. So, I speak for the retail investor, and
Yep.
It's interesting when you saw the SEC hearing in February, where John Carlo kind of famously took that approach where he was bullish and he said, I can't get my kids to look at a stock, but they're buying Bitcoin and they're buying crypto and they're interested.
Yep.
That's the component to this market that really resonates with me. Anybody can do it, anywhere in the world, really. And that's
Absolutely.
like kind of the beauty of it. And, you look on crypto Twitter and Telegram and whatnot, and people, it's kind of like a meme, institutional money, when my institutional money. And, when I see your Twitter, you say, this is going to be the future, and people equate that with somehow they're going to make money out of it. Now,
Yep.
Let's talk about tokenizing securities and what that means for the average crypto investor that is not accredited, that has a high, maybe, I don't know if they have a high risk profile, but they definitely are shooting big, and
Yep.
they may not be aware of the risk or prepared to take that hit, that being in the bottom 5%, but they certainly want to be in the top 5%. They want to change their lives. And that's kind of like when you see the virus is spreading, that's how the virus spreads. When people hear success stories,
Absolutely.
not I lost my ass, in the crypto market. When somebody says I did 100x on this ICO and I changed my life, that's how
Absolutely.
the virus spreads.
Well, so here's what's interesting, right? So the virus is spreading was, again, all of these like little sayings that have somehow now become equated with me. Tokenized the world, virus is spreading, and all stuff. Like, people don't realize that I tweeted it like one time, a bunch of people like latched onto it, and I just kept using it, right? And so like there's no master plan. I wish I could like be smarter than I am and claim that there was some master plan.
That's usually how it works, man. Like when I came up with
I love it. It is absolutely hilarious. I've literally had people come up to me at conferences, and I was at a conference I think like last week or week before. Some guy came up to me, he's like, "Hey man, will you just please say the virus is spreading on video?" And I'm like thinking to myself, I'm like, how did this happen? How did we get to the point where this guy really wants me to say these 4 words on video? But I think that there's some truth to these, right? And that's why they kind of take off. And so the virus is spreading was this idea that like it's just taking a life of its own, right? Everywhere you see, whether it's retail investors, institutional investors, the government, banks, like you cannot go anywhere without somebody talking about this.
Yeah, it's becoming ubiquitous.
Yeah, and the reason is the most powerful part of crypto to me is not the technology, right? Which I think a lot of people are like, oh, like what do you mean by that, right? The most powerful part of crypto is that it's captured the mind and the energy and the imagination of an entire generation, right? This is not going anywhere, not because of the technology. It's not going anywhere because it has absolutely captured a generation's attention and they're obsessed with it, right? Yeah. And so what that does is It drives technologists to go build technology. It drives business people to go build businesses. It drives investors to go invest, right? It drives people who are influencers, stuff, they talk about it, right? All of a sudden, you're going to see it permeate into music and movies and books and all this stuff, and it becomes part of culture, right? And so the part that to me is the most exciting thing is in 10 years, right? And literally in 10 years or less, we have gone from something that basically didn't exist to now has captured the entire imagination and attention of an entire generation. So what does that mean? That capture of attention will pay off for the next 2 decades, right? What we will see is we will see more and more people that are highly talented go into the space. We'll see more capital go into the space. We'll see more technology get built, more businesses built. And so that will continue to permeate over the next 2 decades. And so when you go from that to, okay, what does that mean for that retail investor, right? Well, one, the virus has already spread, right? Like the news is out. This is a big deal. Now, I think a lot of investors have to look and say, okay, how do I participate in this market, right? And I basically break it down into 3 separate categories. So you've got the, and I use the FISMA kind of classification. So there's cryptocurrencies, which are money, medium of exchange, store of value type tokens. You've got all these utility tokens or incentive tokens. And then you have what a lot of people call tokenized securities, but basically like asset-backed tokens, right? And so when you look across that, like money is money, right? Or commodity is a commodity. And so if we believe that Bitcoin or any other token that has those properties is going to appreciate in value, or we're going to be able to use them in a ubiquitous way, then you should participate there, right? If that's what you believe, then go participate there. Some of those cases are going to have the 10, 15, 20Xs. Some of those are going to just be stable coins and things like that where it's going to be more cash preservation. Right, so that's bucket 1. Bucket 2 is the utility tokens, and on the utility token side, what we see is, for me personally, I'm much less interested in this space for 2 reasons, right? And I think this rubs people the wrong way, but I honestly believe this to be the truth. We've had incentives on the internet for a very long period of time, right? We've had badges, streaks, all kinds of monetary games, prizes, all this stuff, and so this is a better version of that in terms of there is now a incentive that has monetary value associated with it that could appreciate in value, right? I always tell people, like, imagine that game that you used to play as a kid, some video game, and all those digital points you accumulated. Imagine if you could have cashed them out for money, or if you held on to them, they could have tripled in value, and then you cashed them out for money. You probably would have played that game a lot more, right? Like, Super Mario Brothers. Imagine all of, like the different things that they used to incentivize you to play that game, right? All of a sudden, if I could somehow take that as money, I would have been way more interested in playing. Yeah. Now, that doesn't necessarily mean that everything should be using a token as an incentive, but it definitely means that there is a lot of advantages that they can be applied. Now, here's where I get disinterested, right? Most of the people who are building these incentive networks are using the token up front to fundraise and then go build the network, right? And so the example that I used, we were talking earlier about, I did the interview with Luke Martin, right, venture coinist, and I told him, I said, look, the Chuck E. Cheese example, right? Like, imagine if Chuck E. Cheese said to you, hey, I'll sell you the coins up front, you buy the tokens, then they take your money and they go build the building and they build the company, and then you can come in and now use those tokens. It's not really that interesting. It's basically a pre-sale. But Pop, right?
what if they say, we're going to actually reduce the amount of tokens in the world by buying them back, and then the games will actually end up costing more tokens because of a demand, because people love Chuck E. Cheese. So the more people come to Chuck E. Cheese, the more tokens we take back, the more value that token is worth. So it's not the same thing.
Absolutely. Now, here's what I say, right? What happens when Chuck E. Cheese goes bankrupt? Tokens go to zero, right? So again, this goes back to the risk. Yeah, it goes back to the risk return profile, right? So again, it could appreciate like crazy if they buy them back and it works out how they planned, right? Gangbusters. But if all of a sudden something goes wrong, they get sued, they go bankrupt, anything happens wrong with the business, tokens can go to zero because you can't use them anywhere else, right? But if you owned equity in the business, in the real estate, if you had debt with recourse, if you had cash flows, right, all these different aspects, you might not get as high of an appreciation or return, right, but you would have downside risk protection. right? And so again, it just comes down to what people want in terms of their risk return profile. So there's a ton of people who are way smarter than me that are really interested in the utility token market. To me, it's just not that interesting, right? Now, I look at tokenized securities and it's flip-flopped. Tokenized securities are super uninteresting to a lot of really smart people. A lot of the best technologists think it's boring. They're like, there's no like big innovation here.
It's like a system. It's like a system upgrade, right?
Yeah, so like literally that's what people tell me. You're rebuilding Wall Street on the blockchain, right? And that's not interesting to them. And I don't blame them, right? I fully see their argument and say, okay, great. Like, yes, I agree. That's what is happening here. And to some people, or to even most people, it's not interesting. To me personally, it's super interesting because it.
He's coming back, guys. Yep, there he is.
My bad.
It happens.
Can we get it back?
Yeah. You were talking about what's super interesting. Because
all
of a sudden, boom, everybody's like, what? What is it, Pomp?
Is I back? Is everybody there?
Yeah, we're here, man.
Okay, all right, cool. I'm back. All right, so on the tokenized securities, what's interesting to me is this idea that I can put much larger amounts of capital to work. And yeah, I'm not going to get as high of a return. But again, if in the utility token market, I can go invest $1 million and I can 2x my money, I make $2 million. But what if I can go put $50 million to work, right? And I can drive 20% return. To me, that's much more interesting, right? Because actually on a cash basis, I make more money, right? And so again, it's just, and now we're fortunate to have investors who can give us that type of capital that we can invest. And you know, it's not lost on me that not everyone can go do that, but that's why it's interesting to me, right? It's a better way for us to drive risk-adjusted returns than participating in the utility token market, et cetera. We don't think that we're the best in the world at participating in the utility token market, so we're not going to play there. We do happen to believe that we are top of the game when it comes to tokenized securities, and so we want to go own that space, right? So I think that's kind of how I look at the market between the cryptocurrencies, utility tokens, security tokens, and why we want to go play in tokenized securities.
So with tokenized securities, basically, from what I've gathered from your speeches and your interviews, is you're just making an attack on paper. You know, it's not, instead of using paper, we're putting it on the blockchain. So for me,
how cool is it? This is why I always tell people, what is it worth to disrupt paper?
Yeah, I mean, but
there's a lot of value to be captured.
I speak for the Moon Boys, okay? You know, I don't want this 20% shit.
Lambos and Moon. I hear you, man. I hear you. Look, I get it.
So how do I invest in something that's, you know, who's going to deliver that change? You know, what company is going to do that, and how do I invest in that company?
Yeah, so here's what I tell people. I think that there's a couple of ways to participate in tokenized securities, right? And again, not financial advice.
Not the securities itself, the company behind delivering it.
Well, here's what I'm going to do is I'm going to give you a couple of buckets of where I think value is going to get created, right? So one is, I think, on the infrastructure side, you're going to see the issuance platforms. These are people who help an asset owner go from a private illiquid asset to a public tokenized liquid asset, right? So I got a building, I own it in a private market, I want to tokenize it. All of those platforms that help tokenize the asset will have value, right? The issuance platforms. Two is the companies that build the protocols that govern it. A lot of those issuance platforms are also building the protocols. But I think there's protocols there that are going to be valuable. Some of them are literally Ethereum, EOS, Hashgraph, et cetera, that are building them. Others are trying to build proprietary, whether ERC20 or something else, these proprietary protocols that allow for the regulatory compliance, right? R token, et cetera. And so I think that there's the issuance platforms, there's the protocols, then there's the exchanges, right? Like I continue to tell people, there is no doubt in my mind within 5 years, we are going to see all the crypto incumbents. So this is Coinbase, Circles, Poloniex, et cetera, of the world, are all going to launch the security tokens exchanges. You're going to see the upstarts. So you've got all of those that I won't go in and play favorites on. And then you've got the traditional incumbents, New York Stock Exchange, the NASDAQ, TSX, etc. I think you're going to see all of them play in this space, and it's going to become so common that we're not going to say, hey, I bought, tokenized shares of Apple, right? We're just going to say I bought shares of Apple. But the underlying technology, the retail investor's not even going to know what's going on, because today we never say I bought electronic shares of Apple that settled in the DTC.
Yeah.
Right? That's what's happening. But
I went on Robinhood and I bought Apple. That's it. I don't want to know how.
Yeah, exactly.
Yeah.
Yeah, and so I think that the exchanges will be valuable as well, right? So you got issuance platforms, you've got protocol, you've got exchanges, and then the last bucket is I think you're going to see a bunch of service providers pop up. So this is all of the investment banks, the marketing services, the investor verification, all these guys, right? Now here's the not fun part about this conversation. Most of those companies are going to get funded in a traditional VC model, right? Hopefully the forward-thinking ones will tokenize and will allow people to participate, right, in some form or fashion that don't have to be well connected in Silicon Valley, New York, LA, etc.
We know they won't.
But for the most part,
they're not going to. I mean,
exactly. I think that most of them, right, and I try to be as realistic as possible. I wish that they would allow that, but I think that the path is frictionless or less friction for them just to go right to the VCs, get the money, and go build their company, right? So, okay, we got that. Then what you're going to see, I think, is you're going to see all these assets coming online, right? And I think that there's two things that are going to occur. There are going to be a lot of value created from the assets going from the private market to the liquid market. And so during that transition, there's going to be value capture. It's very similar to the pre-sale that we see in the utility token market. You're going to be able to invest in either the private market valuation or near the private market valuation, and then it'll eventually get liquid, and there'll be some premium that gets associated with that liquidity, right?
Right.
The other aspect is then once it's liquid, people are going to buy and sell these assets just like they do any other security. Now, here's what I tell people. Today, the big knock against these tokenized securities is it's only for accredited investors, right? Here's my kind of response to that. The regulators are being very, very slow in allowing anything but accredited investors to participate in this. And so without going too far into the weeds, there's basically today 4 regulations that really matter in this space. So you've got Reg D, you've got Reg S, you've got Reg A+, and you've got Reg CF. Reg D is accredited investors. I can raise as much as I want. I can generally solicit. I can market it and tell people I'm raising all stuff, but it's accredited investors, right? Then you've got Reg S, which basically says, hey, I'm going to take money from international investors, right? And so outside the U.S., and I'll be compliant within each one of those jurisdictions, but I'm going to take money from other people. So today what we're seeing is a lot of people use Reg D, Reg S, right? They're saying, hey, I'll take money from accredited investors in the U.S., and I'll take money from international investors that are compliant in their jurisdiction. Game over, right? A lot of people who aren't accredited don't like that game. I actually agree with them and think that that's not a great game for the long-term sustainability of this market. The other 2 regulations are Reg A+, which allows anyone to raise up to $50 million from non-accredited investors, and they can generally solicit it, just like the ICOs, etc. The thing is that you have to register with the SEC. So Reg A+ requires you to register with the SEC. There's no exemption. And so the SEC basically has to say, thumbs up, you're registered, right? They got to approve your application. My understanding today is there's over 20 applications that have been sent to the SEC for Reg A+. They have not approved any of them yet. So people are trying to get the tokenized securities available to these non-accredited investors. We just have yet to see the SEC approve one of these Reg A+ with tokens.
What's the reason why they wouldn't approve it, or why do you think that isn't going through?
I think a lot of it in this may be an unpopular opinion. I actually think the regulators have done a really good job to date in terms of how they've dealt with the entire crypto market, right? And what I mean by that is everything from Bitcoin to Ether to tokenized securities, etc.
I'm in alignment, by the way. I agree.
Yeah. I think that they, if you look around the world, there's some jurisdictions that came out and said, go gangbusters, we don't care, we just want to, embrace this and everyone go crazy. We've seen some bad stuff happen in those jurisdictions. Then there's other jurisdictions that came out and said, we're banning this. This is illegal. India, just is insane what they've done there, right?
Yeah.
Then you've got the in-between, the people who say, okay, it's banned this week. Next week it's not. Now it's banned. Now it's not.
China.
Yeah. Well, I wasn't gonna say it, right? Yeah.
I'll say it for you.
And so it's hard to build a business, right? When that's the regulatory environment, it's constantly changing. It's a moving target. So I think what the U.S. has done is basically said, look, we don't have an opinion yet. We want to see this play out a little bit. We'd like to encourage innovation. We want to protect consumers. We don't believe that there should be fraud and nefarious activity. And so we're going to allow this to play out. But if you are a malicious actor, we're definitely going to enforce on you. And then let us see how this plays out here, and then we will make the rules as we go, right? We'll kind of come to those conclusions. So what it allowed them to do is they didn't make rash decisions, right? And they've allowed a lot of stuff to go that I probably would have thought that they wouldn't allow, right? I mean, there's been billions of dollars raised through ICOs, and they're not banned in the United States. Now, what regulators are starting to say is, hey, we're going to enforce those securities laws, right? And so I think that stuff is coming. And so I think that what they did in that utility token market, they're now doing a tokenized security market, especially with Reg A+. They're saying, hey, let's figure out how this works. Let's make sure that we really understand it before we start to approve things, because now we're allowing people to sell these securities to the non-accredited investor. Now, the good news is that's Reg A+. That's the bigger up to $50 million fundraise. Reg CF allows you to raise up to $1.07 million with non-accredited investors for operating companies, right? So there's a company called Republic. This is kind of their bread and butter. They allow non-accredited investors to invest in these early companies that are raising up to $1 million, right? And so they have allowed that to happen. And so we're already seeing some ability for companies to raise money through a regulatory compliant security framework that allows those non-accredited investors to participate. We just haven't seen it on the big scale everyone wants, those $50 million, and under fundraisers. My hope here, right, if you said, hey, wave a magic wand and change anything that you possibly can in the tokenized securities world, is I would go right at the accreditation rules, right? That it's the number one thing that just makes zero sense to me. It is absolutely ridiculous that in the United States in 2018, the ability for somebody to invest in a security is dependent on their financial means and not their knowledge or their experience, right?
Amen.
That is incredible.
Yeah.
Right? And now, so here's my belief is that the law, right? So everyone always runs around and says the rich get richer. Literally, the law is empowering that. Yep. And so I think that, I speak for myself personally that is the number one thing that I would like to see changed, is the ability for us to take these accreditation laws and change it. Everywhere else in the world does not have these same financial means-based accreditation, right? In Europe, for example, there's a sophistication opt-in, right? So basically you could say, hey, I'm a sophisticated investor or I'm not sophisticated. If I say that I am sophisticated, I can invest in almost anything, and I have very little protection. I've told the government, hey, I am a sophisticated investor. Right. I know what I'm investing in. I don't need as many protections.
Yeah.
Yep. If I say I'm not sophisticated, they drastically shrink the things that I can invest in, but they provide way more protections if something goes wrong. So what their whole thing is, you tell me. I'm not going to tell you what to do with your money, right? But you tell me what bucket you fall in, and if you're not sophisticated, you tell me you're sophisticated and you lose money, you're the idiot, right?
Right.
We in the U.S. take a whole different approach. We basically say, unless you're rich, you can't invest in these.
Yeah, but you can go to the casino and play a slot machine.
Look, in some states now, you're going to be able to gamble on sports.
Exactly.
Right. Now, here's what I will say, right? So I really like to kind of argue one side and then flip to the other side and argue the other side,
You're
right?
doing both sides.
And so, So let me flip it on you, right? And say, well, non-accredited investors today are actually allowed to invest in a lot of securities, right? Every stock on the public stock market is a security, and non-accredited investors can buy that stuff all day long, right? Now, here's the difference, is they're buying an already liquid stock. They didn't get to participate in the private market. They didn't get to participate in the IPO, right? They ended up buying at what most people would deem the lowest probability for outsized returns, right? When it's already publicly liquid, right? With that said, my favorite example, and it is absolute selection bias, right? But Warren Buffett built his early wealth by trading public stocks. So you can definitely make money doing this, right? It's just not going to drive 10, 15, 20x returns in 3 months.
Right.
Right? And so, again, it just goes back to...
What did Warren Buffett start with as far as capital, by the way? Do you know?
So I don't know. I do believe that he didn't start with zero, right? It's not like he had a bunch of these.
He didn't start mining and then flip a couple shit coins.
Warren Buffett invested in 0 ICOs. I promise that. No, but if I remember the story correct, and I may get some of the details wrong, but basically from a very young age, he was saving his money. He worked, paper route, and he had all these kind of little odds and end jobs. Was able to build up, a decent amount of money for a young kid at that time. Started buying stocks. He spent a bunch of time reading, and I'm sure that he got some stock picks. I think he even spent time at a golf course or something, right? And so he did well. Now, here's what I always tell people. My biggest fear in what crypto has done, right? We captured the imagination of a generation. We've also taught that generation you don't need to put the work in, right? And so I can't tell you how many friends I have that last year were texting me in November, December and saying, hey, man, I bought Ripple or Bitcoin or whatever, and they bought it at the height, and they just got slaughtered over the last 6 months,
absolutely,
right? And they had no clue what they were buying.
But don't you think that's a generational thing also? I mean, not just in crypto. Like, people come out of college and expect to just run the show, and you got to put in the work.
So. Absolutely. And so I think that on the investing side, right, I always tell people, you're better off spending the time up front, not putting your money to work, and reading. That's the best investment you can make, right? In the very, very beginning is read, learn, understand what you're investing in, what the upside is, what the downside is, all that stuff. And especially the younger you are, right? The younger you are, the longer you're going to have to make money, the more money you will have later in your life to put to work. And also, you can take more risk when you're young, right? And so I think that a lot of times people they just want to get rich so quick, right? It's the get rich quick. And in that scenario, everything's great in a bull market, right? But here's I proposed this question on Twitter a few weeks ago, or a couple months ago now. I said, how many people here think that 2017 showed us the average crypto fund returned 700% annualized, and the average non-crypto hedge fund returned less than 30%, right? So 700% compared to 30%, right, at the height.
Right.
How many people think that the non-traditional hedge funds are going to outperform the crypto hedge funds this year? I'm willing to bet.
I do. I think they will. I think they will.
I'm willing to bet
the crypto will. The crypto will outperform them. They'll do the.
You think the crypto funds will still outperform?
Yeah, absolutely.
So I think that the top crypto funds are going to outperform.
But you think the mean won't?
I think a majority of crypto funds, and remember, there's 400 total crypto funds now. Almost 80%, I think was the stat I saw, managed less than $20 million.
Yeah, well, then again, I have met some of these quote-unquote fund managers. And, you might be right, actually.
Right?
I might have to rescind that.
Right? It's the long tail. The top funds aren't going to, they're going to have great returns, right? They're going to beat the traditional funds. Yeah. It's the long tail, the people who took the 80% drawdowns, right? And then they're still trading and they're losing money, and now they're panicking because we're in this bear market. It's going to not look good. And so the thing I always go back to is, just like everyone thinks that they're a genius in the bull market, there are still people last year when Bitcoin went up 15x that lost money. Which is crazy.
You would hope a hedge fund manager wouldn't. So
hopefully, but if you start a hedge fund in November and you bought in to a bunch of tokens and you held and you didn't have any risk adjusted, you didn't short near the top, any of this stuff, you probably took a pretty big drawdown, right? And so it was just timing of the market, right? And so I think that, look, if you don't have the discipline of dollar cost averaging and all of these things that are tried and true investing techniques that help people protect against the downside, you're going to experience the reason why those exist, right? And I think we just saw it. And so my hope is that those numbers are actually much smaller than I think they are. My fear is that they are quite large.
Well, the year is young yet, still. So we shall see.
Listen, I've got my 50,000 target out there.
I mean,
we'll see what happens.
Yeah, we will. I mean, CNBC just did a Bitcoin funeral, and but that's actually kind of bullish. But I just want to argue a little bit on the side of the non-accredited investor, and you already took that position, and I'm with you there. But the whole thing is when you think of John Carlo at the SEC saying I couldn't get my kids to invest in stocks, but they can't stop talking about crypto. The little guy has a chance. I mean, and I'm living proof. I started with I wasn't Warren Buffett. I started with small funds, and I performed 200x, 300x, something like that. So
Amazing.
it's amazing. You can't imagine, but that's not typical. But at the same time, last year was a different climate, and I didn't really participate in ICOs, but I had friends that did, that performed even better than I did. Like, I thought my numbers were good, and I heard what they were doing. I was like, geez, I should have did these ICOs. But
you feel like you got left out or something, right? You're like, wait, what?
yeah, exactly. It's bananas what they've done. But the whole point is that right now, people are being protected by non-accredited investors by not being allowed into these exclusive ICOs, which are the only ones that are having success. And
Absolutely.
You're seeing that they're getting eaten up by VCs in seed rounds and early rounds, and then they'll give maybe 1 or 2% of the tokens in a lottery to the regular person. And most of these projects, it's just you wait for the secondary market, and it's a dump fest. The VCs are just unloading on them at 5 to 10x, and they're able to decide when they're going to sell and the whole thing. So it's really not protecting the average person.
So here,
that's
here's
like the essence of crypto.
I absolutely agree with you. Everything you just said is happening, right? And I disagree that we should be in that situation. Again, that's why I go back to we should change the way that we do accreditation laws. I'm all for.
Right.
You want to invest in ICOs? Great. Tell me that you're a sophisticated investor. Opt in. Tell me you know all the risks. And if you lose all your money, that's on you, right? We're grown-ups here. You want to go do that? Knock yourself out. Hopefully, we're doing a great job of educating people and saying that, look, do your research, understand what you're investing in, understand the risks, right? All those kind of disclaimers, etc. But I think that it's going to take some time to get there, right? But that's my big hope here is that we change those accreditation rules.
Yeah.
Now, what I will say about the idea of venture capitalists buying at low valuations, waiting for it to go liquid and dumping on the retail investors, like newsflash, that happens in the public markets
in
as
every
well,
market.
In public equities.
Yeah, of course.
Right? Right? Like every market. And so I think that this idea that...
So that's why it's like crypto is so like, screw the banks, screw every market. This is different.
Absolutely.
And now guys like you are turning it into every market. Like, come on, man. I'm just breaking balls, but it's the truth.
I know. No, listen. Here's the thing that I love is the things that I've sent like a bunch of the deals that we're looking at to my friends, and they all tell me they're like, that's so boring. That's like a building, right? They're like, that's not going to 10x, right? And I'm like,
that's exciting to me though. A building is exciting. Like the notion that you could raise money from people all over the world and they own a piece of this building.
Absolutely.
That is the wave of the future. I believe in that.
Yeah, and so to me, like here's the part that I do understand the argument that I think regulators have. It's when you have a startup, something that is already high risk, and you're going to people who are not well versed or professionals in investing in that type of asset, right? A super high risk. It's essentially a gamble, right? Now, we allow people to gamble, so that doesn't necessarily mean we shouldn't allow them to do it here, but it's still a gamble. There's a lot of things that somebody can do to trick investors into investing, right? We saw this with all the white paper plagiarism. We saw this with the marketing schemes, with the advisory stuff. Like, there's all kinds of stuff that are these schemes to get people to put money in because they think it's a legitimate project and ends up not being, right? So I understand that. What I love about tokenized securities is, especially where we're focused, so large operating companies with audited financials, history of performance, real estate, it's a hard asset, etc. We know that there's not going to be this crazy upside, but what we also know is we've got a really high level of understanding of what is this asset, right, and what's the downside risk protection. Now, I like to think that we are somewhat sane or reasonable, right? And then I look over at like the ICO market, and I'm like, oh, we're definitely the same people compared to those who are just kind of, let me spread $1,000 in each one of these, and I'm hoping for the 50x, right?
Right.
Now, those stories do happen, and to your point, those are the stories that get told, right? How many times have we seen, hey, this investor turned $100K into $20 million, or this team raised $200 million. Like, those are the stories that I think get told in the media, and for good reason, right? They're incredible stories, but it's just not as sexy to tell the story of all the people who put $10,000 in 10 different ICOs and they went all they lost all their money.
Oh yeah, of course. So this brings us to this question. It's kind of relevant. So last year, speaking of December, I mean, this was the peak, close to it, December 19th, you were on Bloomberg, and you said that a bubble could be a good thing, as it kind of shakes out some of the people who don't deserve to be there and leaves the people who have sustainable business with real cash flows and can build for the long term. Would you say that the latest drop in value of crypto market has served to shake out some of these questionable companies, or will the rise of securitized tokens actually create more of them?
Yeah. So that's good that you got that quote. I forgot everything that I said in that one. That was good. I stand by that statement, right? And here's the people who I think have gotten shaken out. So those same friends who were texting me in November, December, right, on an anecdotal basis, they haven't looked at it in a month, 2 months, right? Like they're out, right?
They'll text you when it's 20K again, though. Yeah. They will.
Absolutely,
I guarantee it.
Right? It's the Google searches, right? You just watch the Google searches, right? So I think those people have shaken out. I think right now there's a lot of people who are nervous, right? So I kind of say, like, there's the really weak hands, they're out already. They might have been out for 2-3 months.
It was probably the right play. The people who were really weak actually got out at the right time.
Yeah, they prevented more losses.
Yeah.
Now you've got a bunch of people who I think are believers. They think it's interesting. They do believe that there's long-term value, and they're questioning whether they've got the kind of the intestinal fortitude, right? It is almost what it is, right, to hold through this bear market, right? So they believe that there's a light at the end of the tunnel. They kind of maybe sort of see it, but every day that we stay not going towards the light, I think that they start to question, like, am I just hallucinating that there's a light, or is there actually a light there?
Yeah.
Right?
Yeah.
Then you get to the what I call like the true believers, the people who they don't check the price, right? Yeah, they may hear from a friend or something, it's down, it's up, whatever, but they're building, they're not paying attention to that stuff. And frankly, those are the people to me who are happier. And so what I always tell people is in crypto, I don't care where you are in terms of your belief in the technology, the trading, the speculation, etc. The people I want to be around are the happy people, right? And the reason
hence
why
you're off of Twitter.
we can get to that in a minute, right? But the happy people, here's what those people are. They have a lot of common traits, right? It's not everybody, but they tend to be people who don't look at the price every day, right? They tend to have longer term views, right? They tend to think about sustainability, downside risk, all these little things that, again, if you're just here to speculate and you're trying to, 10x in 3 days, you're not going to be very happy because you just put a big trade on, right? And it just went down 2%. And you're like, oh my, am I going to lose everything, right?
Right.
That's just not my personality, right? Like, I can't live my life that way. And so I think that I naturally gravitate towards what I call like the happy people, but those just tend to be the people who have the longer term view, right? And so, Twitter is a perfect example. Like at some point, I've never seen, I've been on Twitter for a long time. I've never seen it this bad, right?
Really?
I have never seen just the absolute negativity, the ad hominem attacks, the inability to at least allow somebody else to have a different opinion, right? You don't even have to agree with the other opinion, but just like the idea that you have a different opinion than me, and that's okay, right? And like, I'm glad you have a different opinion, even though I don't agree with you. It's just not there.
We call it salt season.
Yeah. Look, it is
for good reason.
Yeah, it is incredible to me, right? And so now on top of that, here's who the people I do love on Twitter. All of basically the smart asses, right? It's all the people with the memes, the GIFs, the snarky comments, like people who aren't actually being negative. They're just being funny. I love those people, right? So like, big secret, I'm off Twitter, meaning I'm not tweeting, but I still got the notifications on. When people, tweet at me, I still see them. And I've seen some hilarious stuff, right?
You're gonna get way more. Look,
keep them coming. I love the GIFs and the memes and all the stuff and everything because it makes me laugh, right? And again, those are the happy people. They know that it sucks right now because there's a market that a lot
gallows of humor
price. Yeah, and so like, look, let's go have fun. And then when it gets back to kind of either normal or another bull market, right? I think that those are the people who, they never take themselves too seriously, right? They don't get too excited on the upside. They don't get too upset on the downside. It's just like everyone chill out.
Anybody, any big names or off the top of your head that really keep you laughing? Anybody you like on Twitter? That you can name?
Yeah, so there's a couple that are pretty funny. Niraj, obviously, just he kills it. He's got the memes going. My partner, Jason Williams, has been killing me lately. So he's now tweeting as if he's me. Because he's like, if you're off, I'm gonna tweet like you, and I'll be like your proxy. And so he's like recycling old stuff. So he's got me cracking up. I'm trying to think of other people who've been real funny lately. There's one guy. I forget his name. I have to go back and look at it. But he tweeted a meme or a photo, and it's from like a movie where they're basically in a bank, and it's bank robbers, and they're holding all the bank executives hostage, right? And he was like live picture of Pomp holding the institutional investors hostage in that room a couple weeks ago, right? Because I had tweeted something about saying how like I was in a room with institutional investors, and so it's like. People like that I appreciate.
They get creative, yeah.
They're just being funny, right? Or there's another guy, I think his name's Lil Bite or something, right? And he tweeted like a tombstone, and he was like, like basically this marks the day that Pomp left Twitter, or whatever he said, and like I was like that stuff is funny to me, right? Yeah. But here's the other part that is quite comical to those not on Twitter. So I'll go talk to a bunch of these institutional investors, high net worth families, et cetera. And they always ask me, like, where do you get information from? And I'll be like,
Whoops. One second, guys.
All right, I'm back. My bad.
Where do you get your information from? Every time you're about to tell us something good, they're saying the Illuminati cuts you off.
No, so
bog.
So like, here's the best part. So I'll walk in. I'll go talk to these institutional investors. They're in their suits, ties. They're all buttoned up. They're ready to go to work. They're doing their thing. Like, where do you get the information from? I'm like, crypto bully, crypto shill, and I started like just kind of yelling out these different Twitter handles, and they look at me like I'm nuts. They're like, "What do you mean?" Right? And I always joke, and I'm like, I'm pretty sure crypto bully is a security.
Magic Poop Cannon told me that it's gonna. They're like, what the fuck?
and look, and some of these people will like reach out to me, right? They'll find me on like LinkedIn, or they email me or whatever, and they'll be like, John Smith. By the way, I'm crypto shill on Twitter, and they're like, but my day job is, and they got like some super serious day job.
Now you can tell them Korean Jew told you. They're going to kick out of that too.
Yeah, listen, I promise you this week on Wednesday I'm going to meet a bunch of investors. I will tell them, look, on Monday night I did an interview with Korean Jew Trading. Like that's just what it is.
So this has been really a lot of fun for me. I have one more question. I do want to kind of give the people in the chat a couple minutes to ask you some stuff.
Let's go.
But
whatever they got.
My question here is the Wild West era ending? Like, how would you describe the landscape of the market right now to like a layperson? And I know you said this is kind of like early stage venture capital, but like if somebody that's wanting to get in, like how would you describe crypto right now?
Yes. So I think there's a couple things. So one is based on geography, right? Inside the U.S., I think that maybe the Wild West isn't over, but it's quickly declining, right? And I think that we're seeing that just across the market. I think in the international markets, we still got a lot of Wild West going on. There's still a lot of cowboys running around, right? And so I think that will continue to persist for some period of time. In the U.S., I think what we're seeing here is there's the feeling that regulators are going to get more serious. They're saying they're going to get more serious. They're going to enforce securities law, all this stuff. And so, as I would expect, there's a lot of entrepreneurs who are looking around the room saying, all right, so what are the rules? Well, what if I did this? Or what if I did that? Or, and so they're starting to play around with what's an airdrop? Is an airdrop considered a security? Is it not a security? How does that fit into the, this framework? And so I think there's still an element of like the Wild West or that cowboy mentality. But I think that now people are trying to do it within that legal framework, right? So they understand that, hey, look, there's risk here. So I want to play within the legal framework, but I basically want to run all the way to the edge and still be within the legal framework, but accomplish what I want to accomplish. Right, so I always tell people like that's fine to do. Just if you play with too much fire, you get burnt. Right, and so I think that's what you got to understand. Now in the international markets, I mean, look, Malta, Gibraltar, like there's a bunch of these places. I don't know if they've ever not had the Wild West, right? When you look at gaming and all this stuff. And so, there's always going to be somewhere that just says, look,
what about Switzerland, actually? Because, in the past, Swiss banking was definitely an escape for some people, as far as, having funds that were protected and whatnot. I mean, you think Switzerland makes a play on blockchain?
So I think that they're trying to already, right? But I want to separate a blockchain and then like hardcore crypto, right? So the blockchain stuff, I think like that's pretty much accepted all over the world, right? You see China, India, all these places that are, are so on some of the ICOs, cryptocurrencies. They're all, hey, look, blockchain's real, right? Almost to a point where it's just marketing, garbage, and it's not actually substance, right? But I think that's what we're seeing. Now, when it comes to the crypto and the ICOs, et cetera, I think what you're seeing is a wide variety of responses across jurisdictions. I think Switzerland specifically, one of the interesting pieces there is everyone says, oh, they're super lenient when it comes to a lot of their banking. Well, crypto is actually not complementary in a lot of cases to them. It's actually a threat. Right? And so, like, if you think of it that way, it would make sense if they were actually really strict against crypto. Right? Now, that doesn't mean necessarily that's what they're going to do or that's even what they're doing now. But, like, there's a lot of these nuances that when you really dig into this idea of, like, how are the regulators, if you're sitting in their seat in these different jurisdictions, how do they respond to this stuff? It's not so intuitive in terms of how they would, what they would do. Because in the jurisdictions where they're very lenient on the, financial services stuff, crypto basically takes away all those advantages, right? It can have a negative economic impact in those countries if all of a sudden people, the classic demo, Bitcoin's just a Swiss bank account in your pocket, right? And so if that's the case, well, then all of a sudden people don't need Swiss bank accounts, right? So I think that's the kind of stuff that's going on right now that they're all thinking through.
All right. Let's get some questions from the crowd. I don't want to keep Mr. Pomp too long, but all right. Evil Sandwich Master says,
"Let's go 10. We got 10 minutes. We'll do 10. We'll do 10 minutes. Let's hear the ridiculous question.
What's your favorite sandwich?" I'm gonna say prosciutto with roasted pepper and mozzarella. That type of guy.
So Cuban sandwich.
A Cubano. Ooh.
Yeah.
Why do you, okay? Why? Well, no, that's not good. Anybody else? Do you want? Coin Daddy says, "Do you want to be on the next Coin Daddy track? I'm already doing stuff with Tone Vase, Jimmy Song, Charlie Lee. I want to turn you into a character for the community."
Listen, if I don't have to sing and I can do anything else, I'm in. Just let me know.
All right.
Singing's out, Coin Daddy.
Maxi, as a trend, is the crypto tech mature enough, and can it wait? Can wait, and the legal part should be a priority now.
Yeah, so I think that the technology is absolutely getting to the point where it's mature, right? I think that there's different parts. So tokenized securities definitely not mature. The cryptocurrencies is pretty mature, and I think it'll continue to mature. The utility tokens, some of the ICO stuff's mature, some of the other stuff's not. So I think it depends on what part of the market you're talking about. The thing about the regulation, I always tell people is it's a sandbox. We got to know the rules of the sandbox, and then we can go do all kinds of crazy stuff, right? And like, my biggest fear is that the greatest innovation is prevented from occurring until we know the rules of the sandbox, right? And so I'd much rather, like, let's get the rules written, and then let's go get all the smartest people in the world, put them in the sandbox, say, here's the rules, like, go just build amazing things that change the world, right? But we can't do that until we know the rules of that sandbox, because the really, really smart, talented people are scared to get in the sandbox because they're like, oh, maybe later they're going to change the rules on me, or I'm going to get in trouble, like,
come after me,
all that kind of stuff. Yeah, all that stuff. So I think that's kind of how I think.
I have a question, actually, because all right, let's hear it certainly seems that some form of regulation, be it G20, the SEC, is definitely coming for ICOs. If you read the language, they're not trying to destroy, crypto. They're trying to nurture it, but at the same time protect investors. You see, recently you have SEC basically saying F isn't a security. Going forward, like, if you had to guess, do you think there is any possibility that they would create a new asset class? This is a two-part question for crypto. Yeah. And also, if they do a heavy regulation on ICOs, do you think it's something where they just say, going forward, this is the rules you have to play by. If you don't, we're coming after you? Or did they do a retroactive where they come after everybody? In the past? Like, what do you think about that?
So I've thought about this a lot, right? And one of the things that I truly believe is that it would be very hard for them to go after everybody, right? And so what is likely to happen is they'll go after one or two huge projects. They'll kind of make a statement, right? And then there will be, kind of what you saw with Ether, where they basically say, look, we're not actually going to say, was this a security when it was offered or not? Mm-hmm. But we are going to say that today it's not a security, right? So they kind of let people off the hook a little bit, right? My thought process is that it probably was a security when it was offered, but it morphed into this non-security. And so when you asked about, like, are they going to create a new asset class? I don't know necessarily if it's a new asset class, but today it's very clear what the rules are around offering a security and what constitutes a security and not at offering.
My thought is, like, I'm sorry, like,
good.
Probably like 90% of the projects would be securities, right?
I agree. Now, there's also very clear rules on post-offering what's a security and what's not. What is unclear, and there are no current rules on the book that address, what if I offer something that is a security and it morphs into not a security, like Ethereum, let's say, right? So what I think they're going to have to do is I think they are going to have to create some new rules for this new transition from a security to a non-security, because we've just never seen that before, right? And so I'm glad I'm not in the room trying to make those rules, right? Because I got no clue what they're going to come up with.
What's a masternode? Like
all this stuff.
What do you do with that?
Absolutely, right? And like if you say that the Ethereum ICO was an offering of securities, but then I mined Ethereum that same week, did I mine a security? And if I'm not accredited, did I violate the rule? Like, there's all these little nuances, right, that they're going to have to work through. And again, I think that goes back to, like, they've done a great job not jumping to conclusions and trying to really understand this stuff and figure it out.
So you think a couple big names go down and that the rest get to slide?
Look,
let's hope that, because if they decided to enforce on everybody, it would really kind of crush the market, really. And I don't think they want to do that.
Yeah, and look, my hope is that nobody who did what they believed was the right thing, they genuinely believe that they did the right thing, gets enforced on. Right? Now, I think that they probably will. There will be a couple of examples, right? But the people that I've got no mercy for are the people who said, hey, I'm doing this ICO, give me money, and then they just stole it and ran away, right? Or like the obvious scams and malicious people. I think everyone's kind of in agreement, like, look, go after those people. Those are the bad actors, like, for sure enforce on them. It's the people who generally thought they were doing the right thing and they weren't. Let's be less ruthless with those people, and let's figure out a way to make sure that doesn't continue to happen. But let's not go spend a bunch of time, money, and resources trying to go track every single one of those people down and find them and do all this crazy stuff, right?
Cool. Thank you. When's the bottom? When bottom, sir?
Listen, I don't know. I figured if I was on Twitter, people would be telling me when the bottom is, but since I'm not there, I'm just going to have to wait till I come back, and hopefully it's higher than it is now.
So no clue.
No, look, in all seriousness, like, trying to time the market in any market is you got to have a really, really special talent, right? And I always laugh when people tell me, hey, I trade crypto for a living. I say, do you think you're a day trader? And they say, well, I trade crypto for a living, right? And I'm like, listen, if you're not a day trader, then trading crypto for a living doesn't match what you do for a living, right? And so you just got to understand, if you got that skill set, knock yourself out, right? There's some people who are fantastic at it. And they make a ton of money, and God bless them, because it's not me, right? But there's a bunch of people who know that they're not day traders and they're trying to be day traders, and those are the people who just get wrecked,
yeah,
right? And so just,
you have to
be super self-aware.
Yeah,
just be super self-aware, and by the way, if you don't know, look at your returns. If you've been day trading, you've been losing a lot of money, you're not a day trader, right? Like, it's pretty easy.
Yeah, absolutely. We all know that you want to tokenize everything, but won't, kind of like vaporware, well, this guy wrote shitcoin, proliferation, dilute the market, and actually delay mainstream adoption?
Yeah, so I absolutely think not only the market corrections, but all the scams and all that kind of stuff, absolutely, that stuff makes it into the narrative of the mainstream media, right? So I think that, we would be fooling ourselves to think that it hasn't had a negative effect on some people. It might not be everybody, but definitely some people say, hey, look, that stuff scams, all that kind of stuff. At the same time, I think that words like scam, shitcoin, charlatan, all this stuff in crypto gets overused, right? And what I mean by that is in early stage venture, imagine if we started yelling at every project that doesn't work, scam, you guys are shit, like we just walk down the street in San Francisco and every failing entrepreneur, we just start screaming at him, you're a scam artist, like this is your third project, but no, right? Like it's early stage venture, so a bunch of the projects are going to go to zero. The default is most of them are going to go to zero, right? Yeah. Now, are there scams? Absolutely. Are there shitcoins? Absolutely. Are there charlatans? Absolutely. I think that we just got to be more honest, like intellectually honest with ourselves as to what's actually a scam and what's not. Now, sounds great when we're sitting here talking. Go on Twitter, zero shot of actual true intellectual debate happening without that word being thrown out. Right. Oh, yeah. and so I think that, you just got to know your audience, know where you are. Yeah. And by the way, sometimes it's funny, right? Like sometimes people are right. Sometimes it's funny. Like I get it. Right. It's cheap laughs on Twitter. But at the same time, I think that we just got to be, a little bit more reasonable about what we're calling scams and all that stuff.
Yeah. So I think on that note, we're going to wrap it up, man.
Awesome.
This was a real pleasure. It was a real treat for me. Thank you so much for coming on and keeping it real on Real Talk, man. You kept it very real. And I'm going to actually watch this again because you shared a lot of good knowledge and information and really appreciate your outlook.
Absolutely. On Wednesday, I'm going to go tell a bunch of investors. I'm going to spread the virus and say, listen, man, I got interviewed by Korean Jew trading on Monday.
Yeah, spread the Jewrian virus, please. And, maybe one day I will see you on Twitter talking about successful people and the like. I am waiting for that time. So, guys and gals, thank you so much for tuning in. It was awesome, and have a good night. Yeah.
All right, guys. See you.